Berkshire Hathaway, Warren Buffett letter to shareholders, February 2025. As a starting point, Warren wrote about the importance of writing his letters to shareholders, stating,
In addition to the mandated data, we believe we owe you additional commentary about what you own and how we think.
Later, he emphasized the importance of an annual review of both good and bad developments, with key observations.
When discussing problems at specific subsidiaries, we do, however, try to follow the advice Tom Murphy gave to me 60 years ago: praise by name, criticize by category.
Section mistakes. Section
Buffett
acknowledged his own misjudgments.
Sometimes I've made mistakes in assessing the future economics of a business I've purchased for Berkshire.
He later listed some of these mistakes throughout the letter, not just in the section dedicated to them. Errors in capital allocation, misjudging the abilities or integrity of managers hired by Berkshire, the cardinal sin, delaying the correction of mistakes, taking control of Berkshire, originally a large northern textile operation. At the end, Buffett shared an interesting statistic about his use of the words mistake or error.
During the 2019-23 period, I have used the words mistake or error 16 times in my letters to you. Many other huge companies have never used either word over that span.
The final paragraph in this section references Berkshire's succession plan.
At 94, it won't be long before Greg Abel replaces me as CEO and will be writing the annual letters.
Mistakes, section Pete Liegl story. Warren took the opportunity to introduce Pete Liegl to shareholders, a key figure in building value for Berkshire who passed away in November while still working at 80. Buffett recounted first hearing about Forest River, an Indiana-based recreational vehicle, RV manufacturer, on June 21, 2005, when he learned that its 100% owner specifically wanted to sell to Berkshire. A meeting took place on June 28 in Omaha. Pete attended with his wife Sharon and daughter Lisa. He wanted to continue running the business, but sought financial security for his family. Warren asked on the meeting, but add in the letter that,
This, I should add, is not an approach I recommend for general use.
Pete responded with 2 key points.
I looked at Berkshire's proxy statement, and I wouldn't want to make more than my boss. But we will earn X
He named a number.
this year, and I would like an annual bonus of 10% of any earnings above what the company is now delivering.
Buffett's response.
Okay, Pete, but if Forest River makes any significant acquisitions, we will make an appropriate adjustment for the additional capital thus employed. I didn't define appropriate or significant.
Summarizing Pete's impact, Buffett wrote,
During the next 19 years, Pete shot the lights out. No competitor came close to his performance.
Later, Buffett referenced mistakes again, but this time focused on the importance of successes.
But I've also had many pleasant surprises in both the potential of the business as well as the ability and fidelity of the manager. And our experience is that a single winning decision can make a breathtaking difference over time.
He listed examples: Geico as a business decision, Ajit Jain as a managerial decision, Charlie Munger as a one-of-a-kind partner.
Winners can forever blossom.
Buffett also shared his thoughts on CEO selections.
One further point in our CEO selections: I never look at where a candidate has gone to school.
He gave 2 examples to illustrate his point. Famous Bill Gates inside Berkshire.
Not long ago, I met by phone Jessica Tunkel, whose step-grandfather, Ben Rosner, long ago ran a business for Charlie and me. Jessica's reply:
Ben never went past 6th grade.
Buffett acknowledged his own education from 3 fine universities, but emphasized,
and I avidly believe in lifelong learning. I've observed, however, that a very large portion of business talent is innate, with nature swamping nurture. Pete Liegl was a natural.
Section last year's performance.
Buffett
Section
Berkshire
provided key insights into Berkshire's 2024 performance. Please remember that this is not financial advice. We will mention it for information purposes only.
In 2024, Berkshire did better than I expected, though 53% of our 189 operating businesses reported a decline in earnings.
Earnings Treasury bill yields improved, highly liquid short-term securities. Major earnings increase in the insurance business. No monster property-casualty event occurred in 2024, though Buffett warned,
Someday, any day, a truly staggering insurance loss will occur, and there is no guarantee that there will be only one per annum.
Railroad and utility operations, Berkshire's two largest businesses outside insurance, saw aggregate earnings improvement. Operating earnings for 2024 totaled $47.4 billion. Buffett also addressed the difference between GAAP reporting and his preferred shareholder metrics.
Our measure excludes capital gains or losses on the stocks and bonds we own, whether realized or unrealized. These long-termers are the purchases that sometimes make the cash register ring like church bells.
Section Berkshire TAX records. Buffett began this section by admitting that taking control of Berkshire Hathaway was a mistake and noted that the U.S. Treasury had early warnings.
The U.S. Treasury, of all places, had already received silent warnings of Berkshire's destiny. In 1965, the company did not pay a dime of income tax, an embarrassment that had generally prevailed at the company for a decade.
Fast forward 60 years.
Imagine the surprise at the Treasury when that same company, still operating under the name of Berkshire Hathaway, paid far more in corporate income tax than the U.S. government had ever received from any company.
Precise data excluding states and foreign governments.
Berkshire last year made 4 payments to the IRS that totaled $26.8 billion. That's about 5% of what all of corporate America paid.
A critical factor in Berkshire's record tax payments to the IRS was a single dividend payout. Apart from this, shareholders have continuously reinvested earnings, allowing aggregate tax contributions to reach $101 billion and counting. Before we continue, please subscribe to our channel, like our video, and enable notifications. It will help to develop our channel further. Section Where Our Money as Shareholders Are. Berkshire owns 189 subsidiaries that, while sharing similarities with marketable common stocks, are far from identical. Some of these, as Buffett has admitted, are companies he would not have purchased today. Yet as shareholders, we have no direct ownership of them, which remains a major drawback. Buffett then shifts focus to partially owned businesses.
In the other hand, we own a small percentage of a dozen or so very large and highly profitable businesses with household names such as Apple, American Express, Coca-Cola, and Moody's.
Important number?
At year-end, our partial ownership holdings were valued at $272 billion. We are impartial in our choice of equity vehicles, investing in either variety based upon where we can best deploy your and my family's savings.
Later in letter, we read about partially owned businesses versus fully owned controlled subsidiaries.
With marketable equities, it is easier to change course when I make a mistake. Ownership of minority positions, we can't change management if that action is needed, or control what is done with capital flows if we are unhappy with the decisions being made. With controlled companies, we can dictate these decisions, but we have far less flexibility in the disposition of mistakes.
Later, we can read about extraordinary cash position and preference of equities.
Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. That preference won't change. While our ownership in marketable equities moved downward last year from $354 billion to $272 billion, Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities, mostly American equities, although many of these will have international operations of significance. Berkshire will never prefer ownership of cash-equivalent assets over the ownership of good businesses, whether controlled or only partially owned.
Also, some short reference to America's success in the story of Berkshire Hathaway, with 4 following quotes.
I have depended on the success of American businesses, and I will continue to do so. In a very minor way, Berkshire shareholders have participated in the American miracle by foregoing dividends, thereby electing to reinvest rather than consume. Berkshire would not have achieved its results in any locale except America, whereas America would have been every bit the success it has been if Berkshire had never existed. So thank you, Uncle Sam. Someday, your nieces and nephews at Berkshire hope to send you even larger payments than we did in 2024. Spend it wisely.
Section Property-Casualty Insurance. Buffett opens this section by highlighting a key difference between most industries and the property-casualty PC insurance business. Traditional businesses typically know their product costs before making a sale, whereas insurers collect premiums up front but only later determine the true cost of the coverage provided. Interesting fact from letter?
We are still making substantial payments on asbestos exposures that occurred 50 or more years ago.
Back to Berkshire business.
In recent decades, this money up front, loss payments later model has allowed Berkshire to invest large sums float, while generally delivering what we believe to be a small underwriting profit. We make estimates for surprises, and so far, these estimates have been sufficient.
Development of insurance operation from Omaha to leaders.
Under Ajit, our insurance operation has blossomed from an obscure Omaha-based company into a world leader, renowned for both its taste for risk and its Gibraltar-like financial strength.
Important to remember,
PC insurance growth is dependent on increased economic risk. No risk, no need for insurance.
history and future.
Think back only 135 years when the world had no autos, trucks, or airplanes. Now there are 300 million vehicles in the U.S. alone, a massive fleet causing huge damage daily. Property damage arising from hurricanes, tornadoes, and wildfires is massive, growing, and increasingly unpredictable in their patterns and eventual costs.
Buffett mentioned also about contracts, change they are offered in case needed. As example, he wrote,
During my lifetime, auto insurers have generally abandoned one-year policies and switched to the 6-month variety.
how to write proper contracts and pricing.
Properly pricing P&C insurance is part art, part science, and is definitely not a business for optimists. Mike Goldberg, the Berkshire executive who recruited Ajit, said it best.
We want our underwriters to daily come to work nervous, but not paralyzed.
As a kind of summary about insurance,
All things considered, we like the PC insurance business. Berkshire can financially and psychologically handle extreme losses without blinking. We are also not dependent on reinsurers, and that gives us a material and enduring cost advantage. Finally, we have outstanding managers, no optimists, and are particularly well situated to utilize the substantial sums PC insurance delivers for investment. Over the past 2 decades, our insurance business has generated $32 billion of after-tax profits from underwriting, about 3.3 cents per dollar of sales after income
Insurance.
tax.
Section Japanese investments. A small but significant exception to Berkshire's U.S.-focused investment strategy is its growing interest in Japan. Nearly 6 years ago, Berkshire began purchasing shares in 5 major Japanese companies: Itochu Marubeni, Mitsubishi, Mitsui, Sumitomo. Since the initial purchases in July 2019, Greg Abel has maintained strong relationships with these companies, and Buffett closely follows their progress. Each firm increases dividends when appropriate, repurchases shares when it makes sense, and maintains a more conservative approach to executive compensation compared to U.S. counterparts. Berkshire considers these holdings long-term investments and is committed to supporting their respective boards. It has also agreed to cap its ownership below 10% in each company. By year-end, Berkshire's total cost for these investments stood at $13.8 billion, while their market value reached $23.5 billion. Meanwhile, Berkshire has steadily increased its yen-denominated borrowings, all at fixed interest rates. As of 2025, the expected annual dividend income from these investments is approximately $812 million, while interest costs on yen-denominated debt are projected at $135 million. Investments. Section The Annual Gathering in Omaha. Buffett invited shareholders to the annual meeting in Omaha on May 3rd, highlighting a slightly changed schedule but keeping the core elements intact. Answering shareholder questions, connecting with friends, leaving with a good impression of Omaha. This year, at shareholders' meeting will be available special issue of 60 Years of Berkshire Hathaway, featuring Charlie's photos, quotes, and stories written by Carrie Sova. There will have 5,000 copies of the new book available. Interesting fact.
Carrie refused any payment for her extensive work on the new Charlie edition. I suggested she and I co-sign 20 copies to be given to any shareholder contributing $5,000 to the Stevens Center that serves homeless adults and children in South Omaha. The Keyser family, beginning with Bill Kaiser Sr., my longtime friend, and Carrie's grandfather.
Facts about re-engineered gathering on Saturday. Starting a bit earlier at 8 a.m., Warren will make a few introductory remarks. Becky Quick will cover as always. We will not have a movie this year. It is second time in row this is changing. Last year, movie was broadcasted to everyone because of Charlie Munger death. Before that, movie was only for people in Omaha. Greg and Ajit will join in answering questions. A half-hour break at 10:30 a.m. After break at 11 a.m., only Greg will join on stage. This year, finish at 1 p.m. Stay open for shopping in the exhibit area until 4 p.m. Buffett concluded,
The Berkshire directors and I immensely enjoy having you come to Omaha, and I predict that you will have a good time and likely make some new friends. February 22nd, 2025, Warren E. Buffett.
Thank you for watching.